Alrighty. Before we open up the floor for some trade talk after today's call, I want to thoroughly break down for you all step by step how I just had one of my biggest days for 2026. It is the first day of quarter three. This is such a phenomenal way to start off the first day of the third quarter. So I want to break this down for you all thoroughly in detail. This was a $7,300 trade times five accounts, so roughly about 35 grand. I want to break down my entry criteria from top down, starting with, of course, the pre-market analysis that I sent out to you all, why I was looking at buys instead of sells today, and then from the top down, from 15-minute down into the second chart, break down how I was seeing delta held patterns on the higher time frame that also coexisted with the lower time frame entry. Um, so that's what we're going to go over in the first portion of today's video breakdown, taking a look at fundamentals. Then we'll break down the technical analysis. And then I want to show you guys the delta held formation that took place on Solana. I'll do a real quick breakdown video playing some clips from some institutional participants in the crypto ecosystem that just had a live from yesterday, June 30th, 2026, and they said some very interesting things about Solana. You guys know that I became recently bullish on Solana, considering that we were trading at 2023 lows that we haven't seen in over 3 years. So I bought a crap, I mean, I can't sit here and say it's a crap ton of Solana. I bought like 800 tokens of Solana, which is probably not a lot to a whale, but I feel like it's pretty close to my goal of trying to get to 1,000 Solana before it pops back above 80 bucks, which looks like I'm slightly running out of time there. So we'll go over that. I'll play some of these video clips, some perspectives from institutional participants in the space, and then we'll just do a real quick update on the TA on XRP, Canton, XLM, and some other assets that we were looking at, going over our previous drawings and seeing now how, fast forward to today, price action has reacted to some of those key areas of interest to give a brief update. All right. So starting off here with my biggest trade for Q3 so far. I mean, of course, it's only day one of Q3, but still, what a phenomenal way to start off. Of course, as always, I tried to give you guys kind of like an overview of what it is that I'm looking for in the market before. Now, this is not a signal. This is not me telling you guys, hey, you should be doing this. I'm just here in an attempt to try to show you all that you have a mentor that can read naked price action relatively well. And what you do with that information is, of course, up to you. So at 7:58 a.m., I always try to get this out to you all before 8:30 open. I said, as for technicals, right now, crypto is still in the consolidated range at around $2.05 trillion. I feel as though the market participants are waiting until Thursday's NFP data before taking any decision on aggressive moves. We still, of course, have the yen carry trade unwind still lingering in the background with intervention fears. Which right now is crypto's biggest risk factor, considering that pretty much everything else is priced into the market. The Iran tensions and the rate hikes have been priced in, at least up to this point. So that's still lingering in the background. Nothing has changed. Crypto had a slight update today, nothing substantial. We're up about $46 billion. Briefly have popped back above the $2.05 trillion dark pool, and we're hovering at about 2.07 trillion. So nothing major there. As for NASDAQ, however, I said yesterday after the bullish run, buyers pushed into the 35.34 dark pool before sellers defended at during Asia session and London session. I still remain bullish as long as price is above the 35.6. The only thing that would change my bullish bias, I mentioned, was a break below the 35.6 with sellers gaining control, which would open the door for a deeper correction, possibly down into the 29,674 to 29,450 dark pool territory. So with that biased in mind, it was bullish above the 35.6. Let's break down from the higher time frame why that was to be the case. First, taking a look at technicals, the pullback today, albeit intraday price action, was relatively bearish, and we're trading below the triple EMA. The reason for that was under the backdrop of cooler economic data. We know that NASDAQ tends to perform well. For example, yesterday we had upbeat economic data. The JOLTS jobs openings came out upbeat. The consumer confidence came out relatively upbeat, higher than previous reading. And the Chicago PMI figures also came out above the market forecast. So yesterday we had a bullish reaction from that upbeat data. Today we got the inverse. ADP non-farm employment change came out slightly cooler than the previous market reading and the forecast at 98,000. Fed Chairman Warsh failed to deliver any projections on monetary policy. He actually specifically said, I will not comment on future monetary policy implications, which of course leaves the market in a state of uncertainty. We also had the manufacturing PMI, ISM manufacturing, and ISM manufacturing prices PMI figures. And all of those figures came out slightly below previous readings and slightly below the market forecast, which of course dampens the overall economic trajectory. Not significant, but coming out below previous readings and coming out below forecasts definitely shows some cooling in the data compared to what the market was expecting. And so we saw that continued profit taking from yesterday's bullish move on NASDAQ today, albeit I was still looking at possible buying opportunities, and I want to show you guys why that was to be the case. So looking at the, of course, delta held pattern, this is such a great and phenomenal PDF. Remember that we want to attempt to try to trade in tandem with the higher time frame. So when we see a delta held formation or the 1 and the 2 on the higher time frame, whether it be your higher time frame poison is the 15, the hourly, or the 4-hour, whatever it is you like to trade with, I personally gravitate towards the 15-minute as a scalper as my higher time frame. You want to see when you see the 1 and the 2 on the 15-minute or the hourly or whatever your higher time frame is, and when price comes back into the 3 on the higher time frame, zooming in to price action in that 3 area that prints on the higher time frame, and then seeing a delta held formation again on the 1 minute or the seconds chart. And now I think this is what, the 4th or 5th day that we've seen buy delta held patterns during New York session to the absolute freaking pip or point, which played out again today in favor of some good buying opportunities. There was, of course, some good sells, but for me personally, because I was biased towards buys today, I did not execute on those sell positions at the beginning of New York session. So let me show you all why. All right, so starting off from yesterday's PA and just taking a look at my 15-minute markings. We are on the 15-minute time frame. And so what I was seeing is that we are still in delta held territory on the 15-minute time frame. Of course, we could translate this up to the hourly, but nonetheless, here is a internal low from yesterday's London session that got liquidated during New York. And it continued to hold the overall previous delta held formation, where same thing prior to Asia session, we had an internal low. We had a run on those lows, and we continued to create bullish ranges. Then coming into the London and New York session, we continued to respect those bullish ranges, highlighting the base from previous Asia sessions price action. You can see that London session had a nice buy attempt from the base, and then New York session used the lows from London to grab liquidity to propel the markets higher after respecting the base, creating now this new A to B range where we again, just like rolling in from previous New York into Asia session, we liquidated internal liquidity and created new bullish structure. So even though yesterday during, or of course, yesterday for us here in the United States, but for you all, it's still just today. During Asia session and London session, we had some profit taking and we had a sell delta at the dark pool from the 35.34, and we had that negative reaction from the delta slightly underneath. We were still operating, in my personal opinion, today in this most recent bullish range, right? Where we had liquidated lows and created new highs. So today, why I was telling you all that I'm still bullish above the 35.6 is because the buyers that were aggressive here that led to this triple moving average crossover and this excessive bullish run, where the stock market added $400 billion right after the New York session open, were, in my personal opinion, still in control until sellers overpower this previous bullish leg, and we start to create bearish price action beneath it. So that was my thesis today coming into the New York session. That's why I told you guys that I was still bullish above the 35.6 or above this previous bullish leg that we're still currently operating in now. All right. So all I simply did to catch today's move, seeing that we are in a delta held or the one here, which is the last low before the market creates a new bullish structure or A to B or 1 to 2 range. All that was relatively left for me to do was to take my fib from the low up to the high and wait for price to come into that 79% discount, which is again why I have my Fibonacci set up this way. I really like that 79% sweet spot, and you can see today on the higher time frame, price came straight back into my 3 territory or into the base from yesterday's bullish momentum and respected the 79% discount to the absolute point. So noticing that all of this happened after the 8:30 a.m. open, so the 8:30 a.m. open was here in this area. That then led me to dropping down to the lower time frame and starting to look for a delta held on the seconds chart. So now you guys can see how we are in a delta held on the 15-minute. That then gives us the green light to attempt to see the same pattern on the lower time frames to look for scalp positions. All right, so let's get down now to the lower time frame now that you guys kind of understand why I was looking at buys today instead of the sells, because we are still, in my opinion, operating in this bullish leg until this bullish leg is broken and sellers take control underneath of the dark pool at the 35.6. So we'll jump down now to the 1-minute chart and look at what we can see. All right. So keeping in mind that the top of this base exactly aligned with the 79% discount from yesterday's New York session, and you can see that we're still trading above the 35.6. Keeping that in mind as I break all of this down for you all today. Here is the 8:30 a.m. open. And so a couple of things that I incorporate in my strategy I want you all to keep in mind is something else that helped me catch the move today. And I want you guys to start to think about what that is as I break this down. Number one, higher time frame alignment. Understanding that we were still in the bullish leg, even though there were sell scalp opportunities, being patient and waiting for the opportunity that aligns with the best risk to reward with the current higher time frame structure that we are currently operating in, right? And so think about it. If Asia session on the higher time frame, even though we did see a sell delta held formation here in this area where we had the 1, the break of structure or the 2, the pullback into the premium or the 3, and the respect of the 35.34 rolling into London where we had the sell-off. For me, this was higher time frame premium all the way up here. So if I'm going to sell with a good risk to reward, I want to see price come back up and trade into these premiums that give me a good RR to take scalp positions on the lower time frame. And you can see today at the New York session open, we were nowhere near those areas of interest. Here are the New York session open volume, or here is the New York session open area. All right. So sells for me, even though they presented good opportunities at the beginning of the session, were sound for me because I aligned myself with the higher time frame. I was like, no, I'm just going to wait to see if they buy today. All right. So that was number one just part of my strategy that allowed me to be patient and wait for the buy opportunities instead of capitalize on the sells. The second thing is that I personally don't trade when price is at a no man's land, right? When price is not at a discount and when price is not at a premium that aligns with the higher time frame or previous dark pools. And so you can see right prior to the New York session open, here's the 8:30 a.m. candle. We are not near a dark pool, neither a buy dark pool or a sell dark pool. Here's the last sell dark pool at the 35.34 up here. And the buy dark pool at the 35.6 was down here. So this price action to me at the New York session open did not present an opportunity because we weren't in a reactive environment from a dark pool. We were kind of just lingering in between the two. So I, again, just waited to see if we could see a reaction, whether it be a bullish reaction or a bearish reaction from the dark pool. It's why these levels are so important to have in your charts, because they literally give you patience. They allow you to say, you know what? Price is not at a dark pool. Let me sit on my hands and wait until price comes down into a dark pool and I see whether buyers or sellers prevail at that level. So that's number two, the second part of my strategy that allowed me to be patient to catch this trade. The third thing is that I personally don't trade until 5 minutes after the session starts. And if I don't see a move at 8:35 that presents itself, then I wait for the next 15-minute increment after that. 9 a.m., 9:15, 9:30, 9:45, so on and so forth. All right. And so sure enough, today the move took place in between at 9:45. So here's the 9:45 reaction where we broke previous bearish structure inside of this new bullish range. And then on the pullback, I entered in for this move. So let's break that down now. So keeping in mind that we are in delta held territory, now we can see the same exact delta held pattern on the lower time frame. Here we come down into the dark pool at the 35.6, reacting from where buyers had previously become aggressive from on the higher time frame during yesterday's New York session. So thinking about it logically, we're not at a premium, we're not fully at a discount yet, but now 5 minutes after the session, we see a bullish reaction from where New York session was buying from yesterday. Now price is at a discount. So if price action is bearish today and New York session is going to sell, where are they likely going to do it from? They're likely going to buy, push price up into premiums to then take their sell positions, right? So that also aligned with my thesis to take buys today. Sure enough, after we have the reaction from the dark pool, you can see that this entire bullish move starts to print the bullish confluences that we look for, which is number one, higher lows that come in after sweeps of lows and a bullish reaction from previous areas of discount on the higher time frame to the left-hand side. Breaks of two previous bearish structures. Here's one bearish structure broken. Here's the second bearish structure broken. So there's two now confluences, check and check on the lower time frames to start to look and consider buy positions. We also broke back above the 50 EMA, which now gives us the green light to say, great, this bullish leg is now bullish volume worth paying attention to. It aligns with the higher time frame reaction. It has given us confluences on the lower time frame to now to start to look for buy scalps and reactions from previous bases. Now, for us as retail investors, we could make a formal attempt to react to all of these bases. And I get this question a lot. Well, what base, Cypress, are you supposed to react to? Because all of these are bullish bases, aren't they? They are. But remember, we want a good what? Can somebody tell me? We want a good what as scalpers?
Risk to reward.
You want a good risk to reward, right? So why on earth, right, would you try to react to buys upon all the retests of these higher boundary ranges? It would throw off your risk to reward because on the higher time frame, we already know that a good stop loss is going to need to go beneath this low here, right? And at a minimum, beneath the last higher low that created the last higher low before price broke previous bearish structure. So for me, I'm being patient. And even though you could have taken little tiny buy scalps from reactions to all these little internal bases, it throws off your risk to reward. And that's where patience comes in and aligning yourself with a fib retracement down into at least a 60 to 79% discount. So after we created this now new one that led to the new two or the break of previous bearish structure, knowing that we are also in a higher time frame delta held formation, even if this price action doesn't go higher, we have to assume that buyers are still in control because they were defending at these levels from where they were previously aggressive from in the past. After we created the one and the two, I personally don't do this in real time. I kind of just have it embedded into my head to see it visually. But I took my fib from the low to the high, and you can see now we came straight down into the 79% discount yet again. So remember, we came into the 79% discount on the 15-minute from yesterday's buys, and now you can see it again. So once we came down into the 79%, I did attempt to execute a buy position here upon the one down, one up candle. However, I moved my stops into profit as soon as we had this bullish move, and this next bullish candle that wicked down took out my first trade entry in break even. That was fine because after we continued with the bullish momentum, now you can see it again on the second chart. I want you to now focus on this area. Because think about it. We're getting a delta held on the 15-minute. I just showed you guys we're now in a delta held on the 1-minute. And so now this is going to be the 3, right? And so now we're going to jump down to this area, and I'm going to show you all how on the seconds chart, we now see a delta held on the seconds chart yet again. So we're going to go down. We're going to go down to the 15 seconds. So after I got tapped out of that first position, you can see here, this was the position that I got tapped out on. This was my first entry. I entered on the 1 down, 1 up candle. This bullish move, once it started printing buy candles, I moved my stops into break even. And then this pullback, which was a 1-minute wick, took me out of the trade. But I was okay with that because, again, we're seeing the delta held. So here you can see lows, or the last low that sweeps liquidity. We then start to print higher lows that then take price into new bullish structure, breaking 2 previous bearish structures. So we're starting to again see the confluences to look for buys. We break previous bearish structure. We break back above the 50 EMA. We create a new bullish range. So now simply all I did was I waited for price to pull back and retest the base. Once we came back down into the base, I entered a bit prematurely here on the 1 down, 1 up candle upon the retest of the base. Price went slightly below my entry. My original stop loss was beneath this low. So to wrap this up, my stop was actually like that. I was okay with executing this position under the impression that if I was wrong, it was just going to result in a small loss for me for the day. I wasn't over risking or anything like that. And so once price was fluctuating in the stop loss, I was cool with it. I was like, all right, great. Maybe this is going to be an L. But nonetheless, price came straight back up. My analysis was correct. We had buyers engulf the sell volume after trapping and have a nice bullish push back above the 50 EMA. And we started to continue with the bullish order flow. Higher low, higher high that now creates the 2, the 3, and created now a new bullish range with internal structure. We came back, we retested that internal structure, turned it into support, and price continued to go higher, right? Then inside the Discord, where I took profit at, keeping in mind that for the day on the higher time frame, we are still intraday bearish for now via the pullback and profit taking from yesterday. Even though now we're starting to see a bullish turnaround, I was still thinking to myself, if we're below London session highs, if we're below Asia session highs, we could still see buyers defend at or excuse me, we could still see sellers defend at a premium. And so if you go back in the Discord and you look at what I was saying to you all in the Golden Dawn section, all right, I said buyers will have a lot of work to do at the 3343. And so the 3343 is where I took profit from this trade today. And I want to break down why that was. So let's just get rid of some of these drawings. And it was at the literal perfect moment before this most recent pullback. Like I get super happy when I take profit at the most opportune moment and then see a pullback that could have messed with my psychology, messed with my risk to reward, messed with my profit, so on and so forth. Not getting greedy and understanding how to stick to profit-taking methodologies to pay yourself, right? So give me 1 second, D'Angelo. Let me just break down this last part, why I took profit at this level. Under the assumption that if sellers were going to defend, they were going to do it from a previous area where they became aggressive at and broke structure, creating new bearish order flow. All right. So that area for me was here, where we can see the last support at roughly about the 3343 was broken after we see the delta held formation or a liquidation of highs here in this area. These highs were liquidated. You can see that buyers got trapped. We remained underneath of the EMAs, and then these aggressive sellers broke the last support. It was then retested, and sellers continued to defend it, pushing price down into the new bearish structure leg. So for me, that was a key area, which was the 3343, where if buyers were going to make some formal attempt to regain control of sell volume, they were going to need to have to put in a lot of effort here upon the revisitation of this previous support that was broken by aggressive sellers that then acted as a resistance if we were going to see higher prices. And so today, once I started to see price start to stall around this area of interest, you can see here sellers starting to defend, trapping buyers. Once we had this bullish break above this high, I had moved my take profit or my trade all the way up right underneath of this bullish candlestick. And then this pullback took me out of the trade completely. All right. So that was it for the position today. Actually, excuse me, let me rephrase that. Once we started to break the 33.43, I took all the contracts. I opened up this trade with 7 contracts. I took 6 contracts off the trade. And then I left one runner. And then that runner, after we broke into this new high, is when I moved that runner up into profit here underneath this bullish candle. And then the bearish pullback took my runner out, to be exact. All right. So that was it. That was it. It was one trade for the day. Very clean, very smooth. Honestly, a very calm, cool, and collective trading session, in my personal opinion. Delta held on the 15-minute, aligned with the delta held on the 1 minute, which aligned with the delta held on the second chart. You literally could not ask for any cleaner price action, in my personal opinion, right? There was, of course, a lot of opportunities in between this move, the beginning of New York session. There were sells, there were both buys, but nonetheless, I'm just here in an attempt to show you guys that if you're patient and you wait for the confluences to play out and you execute under those confluences and nothing else, then 9 times out of 10, you're going to have a trade that goes in your favor. And all that's really left for you to do is to manage it properly. Manage your emotions, manage greed, manage your risk, right? Take profit at a good moment, whether it's a break of structure, a previous area of resistance, a dark pool, so on and so forth. All right. So that was my breakdown trade for today from top down, 15-minute all the way down to the second chart. Hopefully you guys took something positive away from that. Saw some of you all execute positions in the same environment, which was great to see.